This is a great thing for you to bookmark. This can help you with a lot of your homework problems, to remember when within the formula we're subtracting something and when we're adding it. Okay, so this might be something that you want to add a bookmark to. We're also going to, and this is a simplified formula, which means we have a more advanced formula that we're going to do in the next chapter as well. We're going to add some facets to this, or some factors. So our simple income tax formula. We start with income. This is total income, okay? So income, and in your homework, it might be referred to as gross. It might be referred to as total. But income, top line income number. From that, we have some deductions. Now, in this chapter, what we're talking about with regard to deductions is our standard deduction. Sorry, squeaky. Standard deduction is dependent upon filing status. So an individual who has a filing status of single will have a certain amount, and it is provided by the IRS what that amount is. They will have a certain amount of deduction. Somebody who is married filing jointly is going to have a certain amount of deduction. Somebody who is head of household is going to have a certain amount of deduction, but it's all predetermined if it's the standard deduction. Okay? Again, this is based on filing status. Now, you have a question in your homework about the filing statuses, right? So that's what I'm talking about. There are 5 filing statuses: single, married filing jointly, married filing separately, head of household, and qualifying widow or widower. So this amount is going to be based on that. After we subtract that, then we get our taxable income. So again, if the problem tells you Mary Beth has $50,000 of taxable income, you should know this calculation's already been done. You don't have to do it again. Okay? So be careful about this wording when you're doing your homework problems. Our taxable income, we multiply by our rate. So this is our base here, right? That's our tax base, this taxable income. We're going to multiply it by our rates. And we're going to multiply it by whatever, we're going to do that calculation with regard to marginal tax rates. And you'll see you've got a couple of different ways that you can do that calculation. If you remember in payroll accounting, there are 2 methods of calculating withholding, federal income tax withholding. You guys remember what they are? Got the percentage method, and what is it, I can't even remember what it is. Tax bracket method? No, I have it here. We're going to use the table. Percentage method. Oh my gosh, I'm embarrassing myself. Anyway, you remember there were 2. So we've got the tables that we can use, or we can do the long calculation. We have the same sort of thing here. And the same limitations apply. So if we're using the tables here, that table ends at a certain point, at a certain income level. Generally, I think it's $100,000. After you reach $100,000, you have to do the longer calculation. But that's what we're doing here, okay, with these rates. We're multiplying it by whatever that rate is. So this could be a simple calculation. Like if we were in that first marginal tax bracket of 10%, our income's under $22,000, then it's just multiplying it by 10%. It could be a complicated calculation. If our income is higher, it's going to get more complicated. Okay? Take that, equals our tax liability. B-I-L-I-T-Y. I got an extra I in there. No, I don't. You know how it is. This gets us to our tax liability. This is not our tax due, and it is not our tax refund. This is just the tax that we owed for the year. We may have already paid it, right? Through withholding. That amount may have already been paid through our paychecks, through those prepayments of withholding. Or maybe we haven't paid enough yet. Maybe we paid some of it, but we didn't pay all of it, right? So we have to do an additional calculation to determine, do we get a refund? Or do we owe more additional amounts of money? That's when we then take our tax payments, I think they call them tax payments. Yeah, payments and credits. To get either our tax due, I'm sorry, no, this is low here, which would be a, no, this is higher, that would be a positive number, or our refund. My goodness. Okay? That is the basic outline of the tax return. Each section on the tax return is dealing with each of these parts. So our total income, there's a section that contains our deductions. There's a line that gets us to our taxable income. There's a line well, actually this is kind of behind the scenes. This isn't actually going to be on the tax return. It's a calculation that's done separately. Because the next line down is going to be our taxable income, and then we're going to calculate it, and then we're going to enter our tax liability. What we owe for the year. Then we get to subtract what we've already paid, as well as any credits that we may be entitled to. Now, credits are different from deductions, and we'll go into that a little bit more when we get to some of those other chapters where we're talking more about credits and deductions. But know that credits, even though they both reduce, ultimately either increase our refund or decrease the amount of tax due, they do it in different ways. Okay? But this is the basic, simple formula. And like I said, it matches the tax return and the layout of the tax return. Okay. I think that's it for this part. Questions about this? I'm going to leave this up here as we look at the tax return, because I want to show you how it matches up. Any questions? All right, you'll become more familiar.